What's up, Team Tackle? Welcome out to Trade Masters, Wednesday, November 3rd. This is the reigning champ, Coach Tyler. Excited to be here. Got Coach Greg coming on board, see if he can dethrone me. Greg, how you doing?
Good. I'd like to thank you for being a placeholder for my championship. I've come to take it back. So,
hey, we shall see. Already salty. Makes me happy, Greg. It makes me happy. Listen, name of the game here. We do this every week. The idea is to have 3 rounds. Greg's going to come with 3 picks. I'm going to come with 3 picks. There's a Delta round where we will both pitch a directional trade idea. There is a Theta round where we will both pitch a cash flow type of option strategy. And then the 3rd round is a wild card where anything goes. After each round, you, the participants, the audience, you will be able to vote on who won the round. Obviously, whoever wins 2 out of 3 wins. In the rare instance where somebody wins 3 out of 3, the loser will just go away with his tail tucked between his legs. I don't know that I've been on one where somebody lost 3 out of 3, Greg, but hey, I'm feeling lucky tonight. We'll see.
All right. Well, if you want to go for 3, buddy, that's fine by me. It's not a problem.
I like it, Greg. Okay, let's do this. I'm going to defer to you. I'll let you go first. And why don't we start with the Delta round? As usual, I'll be your hands. You steer me.
Awesome. Well, in the interest of Santa Claus coming to town at some point soon, I'm going to go with our friends at FedEx. If we look at the FedEx chart here, this thing is fantastic as far as I'm concerned from a technical perspective. We've got reversal characteristics here. You can see that basically in August it started to fall, and if we connect those points from August on down,
you want
right about
here?
Yeah, anywhere there's there's good. Anywhere there's good. Just connect all those dots on the way down. So we've broken that falling trend line. We've gotten above, I see you have the 20 on here. I usually have the 9 and the 20. It's gotten above both of those. And we are currently sitting at the 50 MA. So one of my favorite moving averages. It's kind of the line in the sand between bulls and bears. And so, yeah, I really like this for a bunch of different reasons. Obviously, there's a seasonality thought process. I don't want to say there's a seasonality component to FedEx, but I know that a lot of people kind of start thinking about UPS and FedEx when we get to this point in time where, Christmas is coming and things like that. So, I don't know, looking back in time, whether there's a real seasonality component, but there's a seasonality expectation to it. Okay. So whether it comes true or not, doesn't really matter, because what I like here is the technical setup, and the potential risk reward for this thing is fantastic. So obviously we don't get involved with this unless it's above the 50 MA. That's my rule. I don't play that game unless it happens. So that's our trigger point. What I like about this is we're going to be filling this gap down here that they had on earnings. Okay. So we're going to, once it gets past the 50 MA, we're going to get beyond that. I actually think it's going to push even higher. I think it's actually going to get to that 260 mark myself. I think that's a more reasonable target. Yeah, right about there. Just the way this thing moves. The other part of this is, if you look at after the gap there, this is a big old cup and handle to boot. So a really nice rounding bottom, little W pattern there, little handle here. So we've got a bunch of different things. You've got reversal characteristics. You've got a really good pattern that everybody kind of looks for. Cup and handles are very popular. You've got it sitting right at a moving average that, a lot of folks, pay very close attention to. So you've got all these things working. Then you add that in, that, like I said, that seasonality thought process, right? You've got all of these things working for you. So I think FedEx is poised for a run here. Trade wise, I like to keep this very simple. I'm looking at a bull call spread. So bull call spread, I believe I was looking at the 44 days out, December 17th. And we're past earnings on this one, so it's not really an issue. Buying the 240 and selling the 260. So when I do a bull call, I buy at or close to the money, or at or in the money, sorry. And I always look to where I think it can get to. And I believe that this can get to 260 pretty easily. Now you're looking at a $678 debit here, or $678 a contract. For some folks, that might be a little bit rich for their blood. I have a solution for that as well. If we go to the Analyze tab, if we could there, Tyler. My stop loss, sorry, we'll have to go back to the chart real quick. My stop loss is at $230 there, just below this high base here, right? So if we look at that there, you're below the high base, you're actually below the 20 MA as well, which I think it holds another little point of support there. So getting out at 230, if we go back to the Analyze tab there, we reduce our overall debit from 678 per contract to about 250. Our reward for this is, what was the reward on that? Can you slide to the right for me, Ty? So you're looking at 1,300. So you're looking at 250, 1,300. So what are you, about 4 to 5 to 1 on a risk reward setup here. So very easy trade. If Santa Claus comes and FedEx takes off, we've got a really good risk reward setup here. We've got all the technicals lined up. This is my Delta pick for the week. I think this is just poised to do good things.
You know, Greg, I knew you wouldn't disappoint, and you came out a swinging. That's going to make this round a little interesting, because it just so happens that on my Delta picks, I had a related company. And I'm actually going to go with it. I'm going to go with it. We're going to see what the crowd thinks here in terms of what their preferences are. But in terms of feedback on yours, look, I got nothing bad to say. I think it's a great pick. And I think that today what made all the difference, right? Yeah. Today made all the difference. This thing popping almost 2%, got it right to the level you need it to. So look, I like it. I like it. In fact, this might be the first time I've liked FedEx in 4 months. So
yeah, it's been hard to love for a while. So
yeah, no, it's finally lining up though. So well done, well done. Okay, well here's another transportation company. You may have heard of it. It's called UPS. UPS. Might as well stay with the theme here. And I am piggybacking off of everything Greg just said about Santa Claus, about shipping, about maybe the positive sentiment surrounding transportation going into year end. Look, it makes sense to me. I don't think you need to overthink it. So the big difference for me on UPS versus FedEx is one of them is a bottoming pattern, a bottoming play, a trend reversal. The other is more trend continuation, right? The one, I think you're looking to bottom fish, right? Which admittedly, it does show some strength here recently, else we wouldn't really care about it. But on the weekly trend, it's trying to find a bottom. UPS on the opposite end of the chart, already showing strength. So from a personality perspective, I think you have your pick here. Do you go with bottom fishing, weakness, now showing a little bit of strength? Or do you go with the one that has already been showing strength and spiked the football on earnings? And I don't usually compare and contrast here, but since these are both in the same space, this is how I would make the case. UPS gapped up on earnings, FedEx not so much. So I feel like it's in a good spot fundamentally, as proven by the earnings response. And I always think it's a baller move when the stock runs 180 up to 200, 205 in anticipation of good earnings. And then it reports such a good number that they jam it higher after hours. I'm always impressed by that. And I'm really delighted that UPS didn't gap and run, right? It gapped, and then little old Tyler's like, UPS, wait, I missed you and I'm not in. I need you to come back and give me a second chance. And UPS, as it is wont to do, said, you got it, buddy. I'll pull back to the 9 EMA, give you a nice little buy the dip type of pattern. Actually wrote about this in the options report over the weekend, the secondary post earnings patterns. I think this is a very clean, very textbook bull flag / bull retracement coming in right after good earnings. The volume patterns support a bull play here. You had really good volume on the run up and then the earnings gap. And comparatively, the volume on the retracement has been benign. So very healthy participation patterns here. And like FedEx, I like today's candlestick. I like the sharp pop off the 9 EMA, and I think that this will continue to climb. That's the technical pattern. What about the strategy? Well, we're on Delta round, so I got to do something directional. And look, Greg and I think alike. And for a stock that's as expensive as FedEx or UPS, bull call vertical spreads are a very easy, simple way of expressing your opinion here. On an added note, the implied volatility has come down after earnings. So calls are considerably cheaper than they once were, say a month ago. So I like the pricing on the options right now too. So I'm going to buy a call option right around the current price and sell something maybe up towards about 230. So let's see what we can do here. I will echo the same time frame. So 44 days, I think is fine. You could go out to January if you wanted to have exposure over the back half of December. In fairness, we often use the term Santa Claus rally just in general to encompass year-end seasonality. November, December tend to be bullish. But if you look at the Stock Traders Almanac, the Santa Claus rally is actually specifically the last 5 days of the trading year and the first 2 days of the new year. Incidentally, December doesn't even give you exposure to that time frame. So if you were really OCD and wanted to make sure you had exposure just in case these don't run until back half of December, fine, go by January. I think you'll be probably okay with December. But you know what? Just to offer some variety, though, why not, Greg? Let's go Jan. Give the people some variety here. I'll go Jan just to make sure I encompass that time frame. And I'm going to, we're at 212. I'll buy the 210, and I'll echo the 20-point spread. I'll buy the 210, and I will sell the 230. Sell the 230, 699, similar pricing. Let's analyze that. Similar risk graph. What's a good stop loss here? You got to give it a little bit of room. No sense in doing a 3-month bull call with a super duper tight stop loss. Look at that 9 EMA back up there. Yeah, so I don't think I want to be closer than the 20 EMA. I'm going to go 199 as my stop. That is a loose stop. I recognize that. So I'm risking a little bit more at 390. You could make the risk less if you use December options. Yeah, you could also shrink this to a $10 spread if you really want to. But still, risking 390 to make 1,300, still I think a decent risk reward. So in sum, UPS bull flag pattern, January bull call 20-point wide. That is my Delta pick. Gregory, what do you think?
Well, this is very you, Tyler. I know you and some of the other coaches. You guys love the bull flags, and I'm warming up to them. It's not something I always kind of paid attention to before, but hanging out with you guys, I'm warming up to them as well. So yeah, I like the technical setup here. Gap after earnings. I guess my only comment, not a criticism by any stretch of the imagination, but comment is when you're at the all-time highs, of course we can go, there's no ceiling to this, right? You can just keep going, right? My thought process here is, though, how much juice does UPS have left versus the potential reward for a FedEx, right? So FedEx has been beaten down. That 320 mark is the high water mark here. Of course, it's got to get through a bunch of stuff. Of course, it's not going to be this trade. But kind of the way I'm looking at this for the FedEx, and don't get me wrong, I love the UPS trade. I love that weekly breakout there. I think that's fantastic, right? Breaking out above that 220 level. So I think there's a really good trade there. However, when I start looking at ultimate risk reward, when I'm looking at that FedEx trade, I'm gonna jump in with the bull call that I'm putting in now. But if it continues to do what I want it to do, and it gets above that 200 MA, or it continues to fly up, I've still got that potential to get back to that 320. That is a large move. Of course, I have to qualify it. There's lots of resistances between there and then, but I like the potential, and it's only potential at this point. I love the potential of the FedEx finding its legs here and running back up towards that high. And then, if I do this bull call and I get to a resistance level of, say, the 200 there, or at that 260 level, then I could always roll it out and up again. You know what I mean? So there's all those different things. And again, it's all dependent on where it goes. It could just hit a resistance level and pull back, and that would be fine too. But for me, I just like the ability to have another, potentially if we run from 240 to 320, you've got 80 points of potential there. I get pretty excited about that. I'm just looking at UPS, even with the breakout, I still don't think we're going to go from 220 to 300 in particularly the same time frame. So the only comment, not a criticism for UPS for sure.
Hey, look, you say you could say criticism. Bring the barbs, baby. Listen,
I'm not criticizing because I take the trade.
No, so well said. I do have a response, but so just so everybody knows, the poll is up. Okay, so you guys, if you haven't voted for round one, you got UPS was my pick and FedEx was Greg's pick. Look, Greg, spoken like a true value investor. Of course, you would come after and prefer the FedEx bottom versus the UPS breakout. That's what makes a market, right? Do you embrace the momentum? Do you embrace the value? I dig it. And hey, let's go halfsies. All right.
There you go.
Half in FedEx, half in UPS.
Hedge your bets, man. Hedge your bets. Yeah. Take the breakout and the retracement. So yeah, no, like I said, I think it's a fantastic trade. I love, like, for me, looking at this UPS trade, if I'd have brought this to the table, I would have said, you know what? I like this flag the way it's setting up. I could be convinced to jump into a bull call spread here. And then if it broke that 220, I'd either be adding more bull call spreads, or just maybe adding another long call to that trade to make it a ratio spread and ride the wave. So if you get a bump here, this thing could be very lucrative. You'd be breaking, if you go back to the weekly chart there, I think it's hit at least twice there, kind of a double top there. If you can get above that 220, yeah, I think you could really turn your trade into something special. And in that vein, you're going to want to go out to January. You're going to want to give yourself a little bit more time. I personally think 44 days is plenty to get the moves that we've talked about. But if you're looking for that longer move, go out to that January, give yourself that opportunity. And like I said, you can start to massage those trades if the market gives you what you're looking for. So I like again, it can't be a criticism because I like the UPS trade, but it was just kind of a comment of, I like that 80 point potential on FedEx.
Nope. Well said. Well said. All right. We will leave that poll up for a little bit longer. Let's get into round two here. Let's go theta round. And once again, Greg, I'm going to let you go first.
All righty. So I'm going to a place that I've never been. I don't know if you can guess where that is, but it's a burrito place. Chipotle Mexican Grill. And I will say I've never actually been there. So this is kind of funny. So if we can take a line, Tyler, from that high of 1958 there, a trend line, and draw it down to the current kind of where it's, just down like that. That's perfect there. This thing is in all recognition for me, a bear retracement setup. Okay, so it hit that high, it started to fall, it tried to test that trend line twice before, it now just tested it 2 days ago. It's got another red candle here. To me, I think this has still got more downside to it. I would not be at all surprised to see if it didn't fill this gap down here. Now the gap's quite a bit of ways from where we are, but I could see it getting down to that 200 MA. We're below the 50, we're below the 20. We're actually closing below the 9 again today. So this just looks ugly to me. It looks weak, and I don't think the weakness is over. So for me, just looking at a theta trade here, I always ask myself, okay, if I'm right on direction, if it continues down, so be it. If I'm wrong on direction, can I be wrong and still be right? And that's where my theta cap goes on. So in this one here, I looked at a bear call spread. So very short term bear call spread, but I wanted to take advantage of some of the overhead resistance that we're seeing right now. So we've got overhead resistance at the 20 MA, we've got overhead resistance at the 50 MA, and that 50 MA just so happens to be a resistance level on the candles as well. Yeah, exactly. Thank you. So we've got that resistance level there. Okay, right at about the 1865-ish level there. So the trade I like the best is the November 19th. So just 16, I think it's 16 days away. 16 days away, very short term. I want to sell the 1865 call and I want to buy the 1870 call. So your delta, you're down around a 17 delta to start with, your short delta there. So you've got a very high probability that it's not going to get touched. Okay. And we're looking at a $5 wide spread. So we need at least 50 cents. Well, it's given us 75-cent credit. Now, the reason I chose 16 days is because Chipotle Mexican Grill, their weekly options are terrible for liquidity. Their monthly options are just fine. There's lots of open interest and volume in their monthly options. So I could have went out to 44 days. I think this is actually a better trade. We get to be in there, kind of a quick hitter for some cash flow. You know, just easy peasy. 16 days, we're getting over our 10% there. We're actually getting what, that'd be about 12.5% if I did the math correctly, for that 75-cent credit there. Yeah, so I just think, you know, easy, quick trade here. Yeah, that's my trade for Chipotle Mexican Grill. I don't think it's done falling. I don't see any signs of life. It hasn't broken the falling trend line. It failed right at the moving average, the 20 moving average there. So until it shows me some strength, you know, I got nothing for it. Now, I would say that the management of this trade, if it hit the short strike, I would close it. I would not take the entire $4.25 risk on this particular trade. I always kind of play these credit spreads. If it hits the short strike, I just close it out and take the loss. You could see what that loss is on the analyze tab if you needed to kind of check it out. But
yeah, you're 150.
Yeah, so you're getting one. So you're about an 80% favorite, and you're risking 2 to 1, right? So two risk to 1 reward. So those numbers, the math checks out, as they say. So just an easy trade here, shorten Chipotle Mexican Grill, and yeah, you know, if they have another listeria breakout, you're probably going to cash it really quickly. So not that I'm wishing for that, but
no. I'm trying to decide if I react positively or negatively after the response to round 1 here. I was going to say a few nice things, but you can stuff it, Greg. You won round 1, just so you know. You trounced me, okay? Got a bunch of value investors on here. That's fine. I still like you.
You mean awesome people? Is that what you're saying?
I said, I get it. I liked the FedEx trade. It's fine. No, I will be honest on Chipotle. I completely agree. If this thing gets above 1865, the bearish thesis is shot. Of course you get out. So totally agree. And I do like the risk reward. Sometimes it's like 3 to 1. This only being 2 to 1 on risk versus reward is actually pretty good. So the only pushback I'll give is these bid-ask spreads still scare me.
Yeah, they're a little wide, but again, you know, if the way I play these, and this is a way that you should always play these as far as I'm concerned, you put in the credit that you want. If it gets filled, great. If it doesn't, no harm, no foul.
Yeah.
Right. I would not adjust the price in any way, shape, or form. You can see that it's got a pretty wide bid-ask spread. That will obviously tighten during the day a little bit. But at the end of the day, I throw in a 75 cents. If I don't get it, you know what? There's a billion other trades out there. So just move on.
Listen, I should just take the victory that you came to the monthlies with me. Okay. I mean, we graduated from the weeklies to the monthlies. So
wait a second. Do you think you had something to do with that?
Listen, obviously I have to take any victory I can after round 1. So yes, I am.
Okay. Fair enough.
Okay, my pick, fade around. Let's go with this has nothing to do with Chipotle, so I don't have a good segue. I'm going to go with financials. I really like this sector, and I really like the current posture. Matt and I actually talked a little bit about this in halftime report. You know, there are a lot of areas in the market that are extended. This is not one of them. It's giving you a relatively nice, easy trend continuation pattern. Financials were hot back in October. They've since cooled a little bit, justly so. 9 EMAs caught up. We've been riding that higher. I would call this a little bull pennant. And I mean, look, I'm going to draw this, okay? Just so you guys, I know you guys know this because you're all very intelligent, very good looking, and totally going to make the right decision here round two. A pennant looks something like this, where you have trend lines that are getting somewhat closer together on the end of a pole, right? Like at the baseball game or whatever. Well, this is a pennant pattern, and it's trend continuation. We're digesting the oversold pressures, and I like, as we're approaching the apex of this pennant, I like the little bullish action that we're seeing, right? So I think that XLF could continue higher. A lot of good charts in this sector with Goldman and Morgan Stanley and Bank of America. So I like the space going into year end. Now, I would love to sell a naked put because I dig naked puts. The challenge with XLF is the IV is really low. Number one, it's an ETF. And number two, just in general, IV across the board is low right now, right? November and December aren't generally known for really high volatility. You know, the market tends to be bullish, and that usually goes hand in hand with lower volatility. So can't sell naked puts, not enough premium there. The juice is not worth the squeeze, as they say. So I'm going to do a bull call diagonal spread. And that's otherwise known as a poor boys cover call. And we're going to juice up the ROI on this. Greg, I think I can get about a 60% ROI on a 1 month poor boys cover call in XLF, which I dare say is attractive. So what we're going to do is we are going to go buy a January. It's a little tricky right now because you don't really have a good 30-day time frame unless you want to use a weekly. And to my earlier point with Greg, I dig the monthlies. So if I can, I'm going to structure trade that way. I'm actually going to buy Jan and sell December. So I'm going to come into January, going to buy me an in the money call.
I'm going to bring you over to the dark side. This thing's got 42, almost 43 million shares traded today. Those weeklies are going to look very attractive, my friend.
Listen, those weeklies are fine. I do agree, right? But you could take your pick, right? Either way, the both of them are going to look.
I'm just playing with you, buddy. I'm just playing with you.
Listen, Greg, I didn't interrupt you. Okay,
I know.
Tanya,
I had to throw it in there.
I have the table.
Here, I'll mute myself.
You're fine. Okay, so I need to buy a longer term in the money call. Need to buy a longer term in the money call as my stock substitute. And I think the Jan 39 strike is going to work fine. So we're going to buy that. It's about a 67 delta. And then I got to sell something against it, right? Greg brings up a fair point. I could use that 30-day weekly. XLF is uber liquid. But I'm going to go ahead and go with the December monthly. I like the 45-day time frame for selling options. So I think that fits nicely. And looking at the deltas available, a 43 delta, it's a little bit too tight. You know, I want to give this stock room to grow before I hit my short call strike. I think about a 28 delta is a better fit. So we're going to sell a 42 strike for December, pick up 41 cents. I like how that reduces my cost by about 20%. That'll do. Overall cost all in $1.91. That's cheap. Now this is all about the risk graph. All about the risk graph. If I've done my job right, this should look like a covered call. Indeed, it does. Looks like a covered call. But see, a traditional covered call, you're looking at maybe 3% return, maybe 4%, maybe 5%. Hard to get a whole lot on a boring low volatility ETF like XLF, but I've spiced it up a little bit. I've levered it up a little bit. And when you look, $1.91 cost, if XLF works its way up towards $42, my potential profit, let's just round it to $110. Okay, $110. Well, if I can make $110 over the next month on 191, you're looking at about a 58% return, which is, well, I don't know, way better than a 3 to 5% return. I'd be happy with that. I think it's just fine. As for the stop loss, I got to give this a little bit of room. I wouldn't use a tight stop. I'm thinking even the 50-day moving average, okay? Because I think dips are going to get bought in financials. Call it 38.70 as the stop loss. Risking, $70 bucks, $73, to make 110 on a high probability trade. I like it. So cash flow play on financials going into your end. Little poor boys covered call. Jan 39 call, short the December 42 $1.91. That is my theta play. All right, Greg, rip it apart. What you got?
No, everybody who knows me knows I love poor boy covered calls or diagonals. It's one of my favorite strategies. I don't mind this trade at all. I think you've laid it out very, very well. My only comment, not necessarily criticism, because I'd more than be happy to be taking the trade. You got to wait 45 days to get your 60%. That's okay. I like my 16 days to get 15%. So, a tomato, whichever one floats your boat. The one thing that I love most about trading is it can fit anyone's personality. Me, I like that short-term bear call, quick hitter, in and out. I would actually even close it. One of the things I do with my credit spreads is I close them early. I'll hit a certain percentage, I'll close them early. So I might not even be in that thing 16 days, which I'm happy with. But, getting that 15%, 75 cents out of $5 risk is about 15%. So, I like that quick hitter, but your 45 days here or 44 days, I don't mind that. Myself, however, and it's just my rules kind of thing, is I would have went to that 30 day. It would have just changed the numbers, not by much really, to be honest with you. But I like the 30 days, and it's only if the weeklies are liquid, and there was thousands of contracts in there, so really liquid. But no, great setup. Like you can't argue with this kind of setup. If you get that, if you max out that full return over that 44 days, that's a hell of a trade. Even if it moves to your short strike price within, say, a week or so, you get 50, 60 bucks, and you're only risking a buck. Well, not even, I guess, 75 where your stop loss would be. So that's a hell of a return too, right? Plus you've got the odds squarely in your favor. Again, I'd love to beat it up, but I can't do it because it's a trade that I would do. So, and I do like the financials. The financials have showed a lot of strength. Goldman Sachs broke out. Bank of America's at all-time highs again. You've got strength in that sector. So if you're looking for strength, go with it. Yeah. Me, I just saw some weakness in Chipotle, and I like to punish the weakness, punish the weak. So
no, I get it. The other thing that's nice about this is, like, normally it is hard to play some of these sector ETFs. They just don't move enough. Like XLE is fine, but some of these, they just don't have much beta or volatility. And so I just think that this is like the epitome or a perfect case study of how you can take a product that doesn't seem all that exciting, but if it has a decent pattern and you have a strong enough bias, you could sprinkle some options magic on that. You can make it a pretty compelling trade. Right.
100%. Yeah. So, and actually, I think that's a really good point too, because a lot of, I know you just said this, but this bears repeating. A lot of those sector ETFs, some of them are almost untradeable as far as I'm concerned. Like they literally don't move enough. There's not enough juice in the options. You have to really be careful with those. But XLF, XLE, XLI, for the most part, those are pretty good. So.
Yep. And they're super liquid. Right. So it's okay, I can get the leverage I need, super liquid. They're just good trading products. So
everybody's trading them. So, if everybody's trading them, there's probably a reason for it. So
indeed. Okay. So round two, Greg, you got Chipotle, not looking so hot right now. And me financials. So we got the pull up. Let you guys vote on that. And let me go ahead and introduce round three, wild card round. Greg, once again, you're going to kick it off, but rules of the road here for round 3 is do whatever the heck you want. No constraints. Go crazy or simple. Where's your head at? Because Greg, I got a zinger today. Okay, I'm bringing the heat on round 3 here, so I'm curious as to what you got.
Dude, I am gonna crush your soul right now, brother. I have the everyman trade. I'm about to bring the pain, as they say in WWE.
Okay.
I have an everyman trade. This is a trade that anybody can do. It's low risk, high reward. It's perfect for small accounts. It's perfect for big accounts. It's perfect for every personality. Okay. We're going to Comcast, CMCSA.
See, this is going to be a good contrast round 3 because you're on this end, right? I'm like way over here. So let's see how this goes down. Go ahead, Comcast.
All right. CMCSA. So look at this thing, just getting beat like a rented mule, just down, tries to find some footing, just failed in October, just failed again mid of October, running right back up, running out of steam on this latest push up here, right at the 9. You can see the volume kind of falling off a little bit there. This to me is your classic bear retracement. I fully expect that this thing's going to continue to plummet. It took a jump down on earnings. It's tried to recover. Well, we've seen this movie before, literally 1, 2, we've seen it at least 2 or 3 times since basically August, right? So, so far it hasn't done any of the things that we needed to do to be a reversal pattern. If it did, then it nullifies it, right? But it hasn't broken the falling trend line. It hasn't broken the 20 MA. It's got overhead resistance. It's got, a couple of big MAs, just not too far above it. So a lot of reasons why I think this thing is going to continue down. There you go. It's definitely, it's your textbook definition of a downtrend, lower lows and lower highs. So with that in mind, I wanted a trade here today where I could take advantage of the downward movement and I could make it so that, again, small accounts could do this trade, large accounts could do this trade, anybody could do this trade. So what I looked at here, and again, I'm trading this to the bearish side because that's what the market's telling me. So what I'm looking at here is if we can go to the November 19th, so very short term again here. So we're looking at 16 days, okay? So what I'm looking at is when I do this type of trade, this is a broken wing butterfly that I'm doing. This type of trade, what I want to do is I want to do it where I think it can go. Now, if we go back to the chart for just 1 second, I believe that this thing, if it falls, is going to get to 50 very quickly. It took all of 4 days to get from 50 back up to 52 and change. Okay, so 4 days. We've got 16 days or 2.5 weeks. Okay, so I believe that in 4 days, it could get back to 50 pretty easily. So if we go back to the trade tab there, what I want to do with this broken wing is I want to sell 2 of the 50 puts for November 19th. Okay, I want to buy the 52, and I also want to buy the 49. It's a 32-cent debit. Very, very, very cheap to do this trade. If we can analyze this trade there for me, Ty, this is what I like here. Okay, I want this to end up at 50. And I want it to end up at that peak because that's our sweet spot. That's where the big money comes. So if it ends up at the top there, let's say it pins at 50 within the next 13 days. If it pins at 50, we're going to get about 166. We're risking 32. So we're 5 to 1 in our potential reward to risk. Let's say worst case scenario is this falls and it continues to go. Right? If you slide to the left there, Ty, we're still doubling our money here. We're risking 32. And if this thing craters, we're still getting $68. We're still getting 2 to 1, right? And if we're completely dead wrong, out of the water, just a ridiculous, point on ridiculous trade on my point, you know what? You lose $32. I don't think anybody's going to be sad if they lost $32. So with this here, it has the ability to pay us off huge. And it's a very short time frame. Again, I understand that, but the risk and reward here is just too great that I couldn't pass it up. And again, it doesn't limit anybody. It's not like a stock trade where I got to buy an $80 stock or $100 stock. This is an easy barrier to entry. As long as you understand the legs of the broken wing butterfly here, as long as we get that movement, like I said, it took 4 days to get from 50 to 52. We've got 13 days to get from 52 back down to 50. I certainly think it can do it. It's starting to show some slowing momentum. You can see the candles getting smaller. You can see the volumes kind of falling off a little bit. It's right at that 9 right there. It's also got resistance at the 20 MA. It's got that upper trend line. This thing just looks like it wants to go back to 50 to me. And if it does, you can cash in big time. It's a trade for everyone.
Listen,
it's the Benetton trade. It's a trade for everyone.
Is that a Canadian reference?
No, Benetton. Do you don't remember that clothing company? There's a clothing company a number of years ago, but they were all inclusive even way before the movement. So
I gotcha. Okay.
Yeah.
Okay. Yeah, no, I dig it. I like the setup. Okay, sorry, I'm thinking about what I want to point out here. Okay, here's the one thing I'd be curious about. Do we have any concern that this candle was it gap down on earnings and they gobbled it up?
No, I don't have that concern. And the only reason I say that is because every time this is pushed up, right, recently, so the last 2 times it's taken a run at the top there, it's failed at both points, sorry, and we're right at that point again. And it's, there's just a lot of overhead stuff to get through here, right? We've got the 20 MA, it's basically right smack dab at the 9 there. It hasn't really, I guess it did break the 20 MA there. I just don't see anything here. If the candles weren't getting smaller as well. So yeah, that was a big response after earnings, but now the candles are getting smaller.
Yeah, no follow.
The volume falling off. Like I said, this to me looks like a classic bear retracement, and it's already done it twice. So if it walks like a duck, it talks like a duck, it's probably on the menu.
Gotcha.
So
I got it. Okay. Well, I mean, look, this round wouldn't have mattered if you won round 2, but the masses have spoken, and I live to fight another day, as they say. So we're 1-1, Greg. So let's see which one of us can pull this out. I am going to go far away from Comcast, and we're going to look at maybe the most exciting stock in the market these days. We're going to take a look at Tesla, Greg.
Fair enough.
All right, so Tesla is bananas. If I wanted to take the safe route, Greg, I would have picked something else. But what the heck? Like, let's go big or go home. Tesla is now over $1 trillion market cap. At this pace, Greg, Tesla's going to be bigger than everybody if it doesn't settle down a little bit.
It's going to be bigger than the stimulus bill once they get it through.
Yeah, it will be, right? So look, Google, Microsoft, Apple, Amazon, Facebook, those are the only other 5 companies that I'm aware of that are worth over $1 trillion. So eventually this is going to start dethroning these other guys. And you kind of have to ask yourself, not that logic applies to Tesla, but you think at some point, like, it'll settle down a little bit, right? And so I want to make a bet here that Tesla's going to settle down a little bit. And this is not a phenomenon unique to Tesla. Volatility tends to move in cycles. You get expansions, you get contractions. Big moves are usually followed by small moves. It's as if Tesla's a sprinter, just ran a 100-yard dash, and maybe due for a breather, right? I don't think it's going to implode and go down to 600. I don't think it's going to double again, because if this doubles, it's worth 1.2 trillion right now. It becomes 2.4 trillion. Like, at a certain point, you get so big that it becomes a little insane to keep betting it's going to double at a certain size. Maybe it does. Maybe I'm wrong, but I don't think I am. So ultimately, I'm going to pick a strategy that bets that this settles down a little bit. The volatility compresses. What particularly makes that compelling for me is the implied volatility is pretty sky high right now. The IV rank is the 78th or 53rd percentile, but the absolute is 78%. So options on Tesla are quite expensive, right? If you combine expensive options with the expectation that the stock, if it does drop, it's not going to implode. So maybe it drops and pops. And if it keeps ripping from here, at some point it's got to pull back. Just because I think that sanity will at some point prevail. Well, to me, that fits nicely with an iron condor, right? With an iron condor.
Is this a Reddit stock? Just kidding.
Dude, it's the Reddit stock that became $1.2 trillion. Like at some point, it's like, I don't know. So I think a condor would be a good fit for Tesla. I actually really like this setup. And this is, now Tesla's crazy, but this is a setup I look for in some stocks where they get extended, vol's high. I bet the stock's going to pause. So we're going to sell a bull put pretty far out of the money, down around 900 or so. On the bear call, I'm going to be up around 1565. And we're going to get a pretty good credit for betting that Tesla remains between the high 1500s and 900. I like 900 on the downside because that's old major resistance. I think that will become support. And then I'm just guessing on the upside because Tesla's insane. So I'm just going as far away as they'll let me go and still get a decent premium. And you actually run out of $10 increment strikes up here. Eventually it's going to go to 25 and then 50-point strikes. So I basically just chose the last $10 wide spread available. Okay, so if we take a look, I'm going to go to December. I don't want to do a super short term. I want a wider range, and 44 days fits the bill. So I essentially looked at the deltas. I went as far out as I could. And the 900 was about a 10 delta. Sell that, buy the 890. You're about $1.15, which for a $10 spread, I like, around $1 on each side, I think is sufficient. So 10 delta, 900 strike. And then on the call side, you can see that these calls are just nuts, right? People are paying out the nose for way out of the money options. But at some point, the strikes go to 50-point increments. So the last one I can do and still have a 10-point spread is 1565. So I'm going to sell the 1565 and buy the 1575. $10 wide bear call. Now, the credit doesn't have to be perfect or perfectly identical. $1.15, 92 cents, close enough. So you add those together, and I get my $2 credit. Okay. Now, if I look at the risk graph, risking 8 to make 2, risking 8 to make 2. But of course, I'm going to get stopped out. Like I'm really not going to take an $8 loss. If I use this short strike, I'm risking about $2 on the upside, risking about 2.5 on the downside. So about a 1-to-1 reward to risk ratio. Okay. So even if Tesla goes bananas, my risk is limited. I'm risking 1 of whatever amount that I can make. And I think there's a pretty good chance that Tesla does not get up to 1565 because that's, I think, another 30% higher from here. That would take it to like, I don't know, 1.6 trillion market cap. I just think that it's not going to get there. And then I also don't think it's going to completely implode. I think they'll buy the dip. So betting it stays between 900 and 1565. I think based on the chart, that gives me plenty of room for error. And if I'm wrong, I'm comfortable with the risk. So there's my wild card pick, Iron Condor on Tesla.
Yeah, it's hard to beat when you have that kind of implied volatility. That's huge. I haven't seen implied volatility that high in quite a while. I don't think you could really, I don't think you could really argue with this theory as long as you're okay with the risk, right? So the reality is if $200 is too much risk, then you probably shouldn't be doing this kind of trade. But yeah, I don't mind the trade. I haven't done any iron condors in a while just because I haven't seen that many setups. I do like this setup. I really can't argue with it. I think you're right. I think it will pull back. Whether it lands at 900, I would think that it's an old resistance is going to become new support. So that all of this stuff makes a lot of logic, right? It makes a lot of sense. and there's a lot of logic in here. And again, the only kicker that hurts you is if the insanity continues and it just keeps flying, kind of like Dick's Sporting Goods did last year, right? Where, there was just no rhyme or reason and it just kept going up, up and up. So, I don't mind it. I think the euphoria of earnings season will wear off shortly. And I would not be at all surprised to see this pull back. And it is kind of overcooked right now. So I think it's kind of due for that too. So great trade, buddy.
No, and I feel like it's hard to go directional in Tesla right now because if you go bullish, it's like you have to go bar by bar. And we talked about this in the scouting report. You're chasing at this point. And to go bearish just seems insane. And so it's like, well, look, you either don't play or you structure something like this where you don't have to, your success or your profit is not contingent on, I guess, the next couple of days in Tesla. At this point, I feel like that's just a hard bet to make. And so anyway, so if I had to do something on Tesla, this is the type of thing that I think would be the easiest, right?
Yeah, like, I would not take this trade directionally right now to the upside. What I would do is just wait. Like you can see that it's now trimming sideways, right? So if it continued to trim sideways and made a high base and the moving average is caught up to it, then it makes it a whole different ballgame. But right now, if you kind of look to every time this pulled back before, and you look how far away from the moving averages the price is right now, that's a pretty big gap for this particular stock, right? Every time it got too far away from the 50 here, it tended to correct itself. So I don't think you can play it bullish right at this point in time, but if you give it a little bit of time and it meanders sideways, which it kind of appears it's doing right now, then I think it's going to set up for another bullish trade, and I think it could go. But again, by that time, you're going to be on through your 44 days there, and you could adjust accordingly. So I like the trade.
One more thing too, because you got $2, honestly, all I need is $1 and I made like a 12-13% return, right? So the other thing I like about this is you don't have to stretch it out the whole 44 days. There's enough juice in there where you could potentially see a vol crush, which is typically what happens, right? This will settle down a little bit. The vol will come down, and it shouldn't take it 44 days to come down. You make it 2 weeks from now, and they've already crushed those way out of the money options because the insanity has stopped. And so the kind of added additional benefit here is I just like that there's enough juice there. That would have been harder, Greg, if I just got $1. Then it's
100%. Yeah.
But the fact that you gave me 2 is like, okay, there's room for me to bail early if it just pauses for a week.
Or one of the other things that I think is worth mentioning too is if you've got a rule where you close a spread or a condor or whatever at a certain percentage, geez, if you only got 50% of this move, right? If you put in a closing order at $1, right? You'd be more than happy just to get that and move on, right? And that's still a great return. So I think there's merit for sure.
All right. Well, polls up. You guys, it's close. Okay. So I got a question. I got a question for Greg while the poll's up. Greg, you watch soccer?
No, dude, I'm a rugby player. I would actually get kicked out of the fraternity of rugby players if I watch soccer. So
I'm going to we have a major league soccer team here in Utah and Real Salt Lake, and I'm going to a game right after this call.
Nice.
One of the last games of the season. So
I know we got one in Toronto, and I know it took off like crazy, and probably a decade ago, whenever they got the team, it's very, very popular. I was clearly joking about it, but I am a rugby player. I've just never really been into the soccer, but I know a lot of people that love it. So I think you'll have a good time. You'll enjoy it. The fan experience, from what I understand, is really good. So.
No, it is for sure. And my not in-laws, my sister and brother-in-law. Well, I guess brother-in-law. My sister and brother-in-law, they have season tickets, so they take their kids and they're not taking them today. They're taking me. So woo woo.
Okay, you gotta watch that before you go. You gotta watch that the episode of The Simpsons where they all go to the soccer game. Did you ever see that one? I don't know if you watch The Simpsons or not, but anyway, they go to the soccer game, and basically they're at the center of the field there, and the one team kicks the ball between four guys, back and forth, back and forth, back and forth. This goes on for about 5 minutes, and next thing you know, there's a riot in the stands, big soccer riot. So it's kind of funny, but God bless the Simpsons. So
yeah, that's right. That's right. All right, Canyon, what do we got, buddy? Coming down to the wire, Greg. I almost. Let's see. Are you on YouTube, by the way, Greg? Or am I the bear? Am I the guy who did?
Yeah, you could, pull an Arizona here and just tell me I lost. It wouldn't matter. So
you lost all three, dude.
There you go. It was all those mail-in ballots. That's what got me. It was the mail-in ballots.
Oh man, that's funny. Okay, dude. 51% to 48%. I got you by whatever that is, 2.5 percentage points.
Well done, sir.
Listen, I thought I was screwed after round one. It's like, you degenerates, you picked FedEx. But I had tons of fun, Greg. I hope you did too, man.
Me too. Thanks for the game. I appreciate it. Thanks for all the votes, folks.
Yes, we always appreciate it. Win, lose, or draw. We appreciate the participation, and we're always happy to present these picks. So I will return next week, and I'm sure Greg will be back at some point to beat me over the head here. So
100%.
Greg, always appreciate it, buddy. Thanks, guys, for hanging out tonight. We'll be back on next Wednesday for another round of picks. So have a good evening.